Hello and welcome to Earnings Edge, and my guest today on Earnings Edge is Siddhartha Mohanty, who is the MD and CEO of LIC of India, which is Life Insurance Corporation of India, and one of the largest insurers and fourth largest globally. Sir, thank you very much for joining us on NDTV Profit. My first question to you, sir, it's been an impressive quarter with respect to the kind of growth which we have seen, and you've been doing this quarter after quarter. Give us a sense of how you're seeing the premium growth going in, because there are a lot of changes also which is happening in the insurance sector as a whole. Regulators have brought in new policy. How is the organization looking at those policies and taking it forward?
You see, if you see the first quarter result, we have shown a APE growth of 21.28% total. And in individual, we have shown 13.41%, and in group, 34.37%. So this is the APE growth. So that itself indicates whatever strategic initiative we have taken post-listing, particularly in product mix, channel mix, digital intervention, all those are giving results. So that's why we have been able to show good growth rate in first quarter in premium income.
Is there a product mix we are seeing, par, non-par, which is coming in? But within individual and group, we are seeing that group is also getting a good growth rate, which is there. Is there a conscious effort to push group insurance as well?
Yeah, group insurance is our major share. They contribute major share to our total overall market share. So focus is also on group insurance. But as you told, for product, non-par product share has gone up from 10.2 to last year Q1.
Yeah.
This year 23.94. So that itself shows that our product mix strategy, both group as well as non-par. So we are on right track.
Sir, we saw this big strategic shift happening in non-par towards the end of 2023 calendar year, and that showed in Q3 and Q4 results as well. And in Q1, it's showing up. You recently launched 4 new products which are again non-par in nature. How do you see the non-par portfolio developing and growing?
See, already whatever commitment we gave, actually at that time in the first year of listing, we told we'll grow it from 7.12 to some 15% non-par share.
Yeah.
So it is already 23.94. So my sense is it will go further. In the current year also, it will go further, but it will be difficult to give any specific estimate towards figure. But definitely growth will be there, and a share of non-par will slowly grow.
Do you see more products coming in non-par in this financial year?
Already we have launched 4 products. You have seen that UBA term, UBA credit life, both offline and online also. So in coming days we will also launch some products, both side, not only non-par, but also we will also see if there is any scope for par product, that also can be thought of.
One of the metrics which the street is looking at, and I'm being a little technical here because VNB margins, which is there. You've been able to grow VNB at a good healthy rate. Your margins are around 13.9%. Year on year, it's a jump. But if you look at Q3, Q4, because the product mix was such in favor of non-par, the margins were much higher there. How do you look at VNB margins going forward? And the sustenance of margin, there's a volatility in the margin as we speak. How do you even out that volatility in VNB margins as we go ahead?
If you see last year Q1, 23 Q1, we had a margin of 13.7. As against that, we have done 13.9, just 20 basis points growth is there. But if you see March figure, March we were 16.8.
Yes.
Because March voluminous business comes towards last quarter, and so that gives a good growth rate both in margin and volume also. So coming days, my sense is the way we are doing our product sale, product mix, so those will definitely give good margin, and the objective is to have improvement upon last year's margin, which was 16.8. So my sense is we'll at least be able, despite all whatever is happening in the environment, so many uncertainties are there, some positive growth around 2% over last year, that is our expectation.
You're looking at 19
around 19 plus.
And what is when you had that vision of taking to beyond 20%.
But that was we told 5 years time. But
You're
it just,
well ahead of that
we are
timeline.
whatever commitment we give, we fulfill much before time.
When do you see that hitting on a consistent basis, 20% every quarter?
20, I think next year we will be able to achieve that.
And every quarter you will be able to hit 20%?
That is my sense. That is my sense. Depending upon other factors in the environment.
You know, one of the other thing which you've been talking about in the last 2 quarters is the health insurance foray. Where are we on that? You said you are internally working on the details of it. If you can share something on it.
You see, we are already in life and accident because with life insurance policy we provide accident cover also. So that is there. So we looking to market need. We also propose to be in a health insurance space, and we are exploring opportunity to acquire some stake in some standalone health insurance companies. If you see today, this distribution channel of sales, this health insurance companies, most of my agents, they are selling a health insurance product of standalone health insurance companies. So if LIC is in that space, then definitely there will be no issue for distribution. Ready-made distribution channel is there, and definitely will get good share for LIC.
One of the biggest challenge for any health insurance is a distribution network, and you already have that. What prevents you from looking at it from an organic point of view? It's only the bandwidth and the focus that you need to bring in.
Organic will take time, because when you develop organically, you have to set up everything here. But when there is already one thing is there, so it is like a plug and play. So only my distribution network, they will work, everything is available there with that company. So that will be easier option. So that we are exploring.
So is it going to be a strategic stake in that sense, or a majority stake in that company?
We will have a good stake, so that management control will also be there, but it will be managed professionally, that what we are planning.
You've been one of the biggest investors in the market. If I hear clearly, in the con call you said you made equity profits of 15,500 crores in Q1. How do you see the current market situation? We have all the regulators talking about markets, how there is retail involvement into some segments of the markets which are not supposed to be, and money is getting diverted from other financial products and institutions to speculation. What is your view on that?
We are a bit, you can say, when we invest market, our approach is very practical, pragmatic approach. We do not respond to market hypes. We have our internal thing, internal research team is there, very strong research team. Sometimes we take some contrarian view, which gave a result later on. People at that time they question why you invested, 2 years, 3 years hence they appreciate. So our approach is not in terms of what is happening in market and just a quick response to that. Our approach is a consistent approach, and definitely if you see whatever profit we are making good profit, and there is growth in our equity profit. But if you compare, market has gone up so high, why LIC made so less profit? So from that you can understand that we are very conservative in our approach.
Last financial year, if I'm not wrong, you invested 1.32 lakh crores into the market. Do you expect to invest the same amount or more this year?
That depending upon market situation.
Because
if opportunity is there, definitely there will be some investment depending how market behaves.
You brought in new products, including the ULIP product, which
ULIP products are also going well.
Well, and is growing at a much higher rate.
Triple-digit growth.
Do you see more investments coming in? While profit taking is what LIC does, contrarian view, and it takes it. But investing more into the market this year?
It depends. Obviously, there will be some positive as compared to last year. Positive growth in our equity investment that we expect, but again depends upon how market behaves.
Sir, the reason I was asking this was that your embedded value, it's been growing every year. We've seen that happening. But your yield on investments, because you have a high exposure to G-Secs and state bonds, which is 60% of your book, yields are coming down. Do you think equity to more than compensate the fall in yields there in that sense?
No, you see, if you compare VNB vis-a-vis VNB margin, what you are talking of.
Yeah.
So VNB growth 23.66% growth we have shown in Q1, but margin just 20 basis points growth we have shown as against 13.7, 13.9, and my take is it is product mix and a product benefit, because of product mix non-par share has gone up, but product benefit we have enhanced annuity rates and other benefits in some of the plans. So that's why my sense is it has been somehow margin has grown very little.
Sir, at the time of listing, there were three things which was there. One, you will change the product mix. The second one was, that you will be bringing in a internal transformation which is there in digital transformation which was there. And the third one was that, you're going to guide towards margin which is at par with some of the private players. You are ahead of most of them. Can you give us those internal levers that you're working in? When do we start seeing the results of those internal transformation?
Actually, digital transformation project, actually that is 18 months project. So already work is going on in full swing, and in Q4 you will see the result. Q4 result will start coming, though total project will take some more time, but Q4 definitely impact of digital transformation will be felt across.
And is there a way we can quantify the impact?
Absolutely, at that time definitely.
You will be able to do that.
All processes have been completed and now they are working so that result will come.
Do you see more products coming in this year on a non-par basis?
And we will have eye on all, not only non-par will be there, but depending upon market need also of some other products we can also launch.
Because 2 years back when we were listing, you said that the street was saying that there are some holes which are there in the product mix as compared to your competitor. Last year you launched 7, then there's a ULIP which came in in Feb, and now 4 more products which have come in, including the credit insurance life, which is product which is there. Do you think that there are more holes that needs to be picked?
That our internal team, they are working on that. It is a continuous process. Product launching new product, depending upon whatever we get feedback from our customers as well as field force, our research team works on that, and vis-a-vis market, whether any other such product is available with any other insurer, all those things we take into account and we design our product. And it is a continuous process, and in the current year some more products also we expect.
Sir, insurance as a product has changed its, the color and the texture in that sense, from being a tax-saving instrument to being a life insurance product now. The taxation part has also changed, right? Earlier you used to do it for taxation, now the taxation benefit is also not there. Are you seeing an impact of that on your product as well?
No, I don't think a taxation is an issue for insurance buying, because in any case a taxation has also limit.
Yeah.
You can get exemption up to certain limit. So mostly people buy insurance for insurance protection. That is first thing. Secondly, some saving element, because in India, so always people expect how much I am paying and how much I will get back. So some savings element is also there.
Your savings product is
has
doing
gone
very
up
well.
like anything. Yeah, growth, very high growth is there.
Do you see this growth sustaining in that sense?
So that growth, definitely growth will be there, but the same growth whatever we showed in first quarter, it will be a challenge to maintain that 300% growth we have shown in first quarter in savings.
Yeah.
345% growth.
Yeah. Sir, my final question is on surrender value. Industry has been debating. You are one of the leading players here. What is your view on that? Will that cause some kind of hiccups for industry to push the products across? Because at the end of the day, if you're going to maintain your margins, you have to reduce your marketing commissions. So how do you balance that out?
Actually, that will depend upon experience. Post that regulation and master circular, what will be the experience of the industry over say 1 or 2, 3 years? Because I don't see necessarily just because surrender regulation has changed, giving more surrender value at the hands of customer, people will be motivated to go for surrender, because that was not the purpose for which they have taken policy, because in any case they will get less. Whatever they have paid, surrender value will be definitely less. It may be little more than as compared to earlier, but it will be still less. So nobody will be tempted to go for surrender unless there is very serious financial need or health issue, something like that. They may need to surrender policy. Otherwise, people in India, to my sense, are now quite mature. They know what for they are taking policy, and that objective they will fulfill.
And are insurance companies like you prepared to look for this change come October, because it's going to be effective?
And we are discussing with the regulator, and October changes, definitely there will be some impact on everybody, entire industry. So that discussion is going on.
Because the industry's maximum, push for policies and sales.
Because since that experience was not there, so all products are to be rewritten. Because premium, what will be premium fixed, what will be surrender, all those things, if they have to take that experience, actuaries will calculate, redesign those products.
And do you think regulator pushing it by a few months if industry is not ready?
Industry is talking to all of us. We are writing to regulator. We are in touch with regulator.
And you expect some delay?
It is up to regulator. But anything what will be coming will be good for the industry, good for customer.
My final question to you is, sir, you have set a vision of 5 years at the time of listing, and you are going ahead. You're well ahead of that vision. Are you going to, bring down the targets more aggressively down, saying that, or you're keeping the vision there?
No, our vision will not change. Our objective will be how to achieve that much before the deadline. And that will be our objective.
And you're saying
that we are already demonstrating.
And by FY26 it should be done. That's what you're looking at.
Hopefully, I'm confident, because if things move by God's grace, everything is moving now well. So by 26 also, whatever we told 5 years, so that can be achieved.
Mr. Mohanty, it was a pleasure talking to you. Thank you very much for joining us.
Thank you, my pleasure. Thank you.